Hey guys, Drew here from SwingTradingBootcamp.com, and this is the weekend review for May 14th, 2010. Let's take a look and see what the market did this week. Here you can see the chart of the diamonds, the Dow Jones Spider, and you can see that this week was another interesting week in the market. Monday we had a huge gap up. Market finished up the day over 400 points. Tuesday and Wednesday we had a rally up towards the 50-day, and then Thursday and Friday the selling resumed in the market, and we closed a little bit lower after a gap down on Friday. Here you can see the spiders, the S&P chart. You can see this is a pretty textbook chart. After this pullback we had last week and the big selling day on May 6th, you can see here Monday's big gap up, rally right up under the 50-day, and then the selling resumes on Thursday and Friday. Now some of the sectors that we've been watching to the long side are of course gold. You can see the JLD here made new highs a few weeks ago, rallied last week, and then this week kind of a not too much of a move, but still holding up near its highs. One other sector that we've been watching is the GDX, which is the Gold Miners ETF. We've posted a lot about this on our blog at swingtradingbootcamp.com, and you see here how we've put the annotations onto our chart. We have our uptrending channel. During this pullback, we really started to notice the relative strength as the market was pulling back, and some of the individual stocks within the sector we've been watching as well. On Tuesday, you see it gapped up to new yearly highs. This was the previous high here. Gapped up on Tuesday, rallied through to new highs, and now made a little bit of a pullback here towards the end of the week. Something we're watching going forward to see if the gold and gold miners continue their strength. Another sector that we've been watching is silver. Here's the ETF SLV. The previous yearly high was here. Again on Tuesday, just like the GDX, popped up, gapped up to new yearly highs, made a slight little run, now is pulling back just above the highs. We'll see how price acts around this level during this pullback. Two other sectors that we're watching, real estate and the home builders. Here's the IYR, which is one of the real estate ETFs. You can see here that still trading above its 50-day, although on Friday it made a run, spiked under it, closed right above it. So a little bit stronger than the overall market. Again, here's the diamonds trading well below the 50-day. Spiders again making another run towards the previous lows below the 50-day, while the IYR holding up just above. It doesn't mean we're looking for a long trade necessarily. It's just something we're watching that's showing a little bit of relative strength. Here's the XHB, the home builders. You can see here kind of the same pattern. After the big move down last week, you can see the pullback here, and now another run towards the 50-day, but still holding up well above it while the market trades below it. We also know that, and we posted a lot about the XHB and some of the trades that we've taken in the past on our blog with this ETF as well. We know that the breakout was here through the 17 to 1750 level. You can see the price rally here, the pullback right above 1750, another run, and now with the rollover last week, traded under the 50-day, rallied back above, and now we're dealing with the 17 to 1750 level again, right at the 50-period moving average. Not getting too excited about it yet for a long trade, but just something we're watching going forward. Now let's flip to the other side of the coin, and let's look at the relatively weak sectors. Obviously the financials. We've posted a lot about this sector as well. Ever since the news about Goldman came out a few weeks ago, we've been really focusing on the financials because they've shown so much relative weakness. Big sell-off here under the 50-day. Now a classic rally on the gap up on Monday, and a little price movement here. Pretty anemic price movement. Can't even break the 50 period. And now Thursday, late day, kind of rolled over. You saw some good acceleration to the downside, and then Friday's gap down and go. You see the continuation. We've been trading FAS, and we've posted about this on our blog. This is our third trade going into FAS. We had our first trade here on this higher low here. We sold into this previous resistance level. Another trade was initiated here. We actually held this one a little bit longer in hopes that it was going to break that level. We actually exited at 15.19 up here on this May 6th really big sell-off. Remember, this is an inverse ETF, the inverse financial. So we sold as it pulled back at 15.19, and we were flat going into this week. you can see a pretty decent pullback all the way back down to the $12 level. Now initiate another long trade on Thursday. So 3 trades within the financial sector, all for significant gains. Another sector that's been weak, obviously the broker-dealers. The AI here is the broker-dealer ETF, and you can see kind of same price pattern. Pretty anemic price movement under the 50-day again, and then Friday's gap down and go. One of the other sectors that we've been watching that's been really weak is the SLX, or the steel sector. Okay, a lot of relative weakness in this part of the chart here, and if you compare it to the Dow and the S&P, you'll notice what we're talking about, the relative weakness. The rollover here obviously accelerated, crashing through the 50-day, testing these levels down here. And then early this week we had the gap up. Some positive comments came out about U.S. Steel kind of held the sector up, made a turnaround bar here, and then an acceleration to the downside with the rest of the market. DBA is another very weak sector that we've been concentrating on, and it's just really been one of the weakest sectors this entire year. Not trading much over its 50-day at all. Puts in a lower high here, acceleration to the downside, chopping around, and now is making another move down towards the lows. Now, during the move last week, I told you that we pretty much, and we posted on our blog why we did this, but we were pretty much flat after this move. We got stopped out of some of our positions. Our trailing stops were hit, and on Friday we watched the market, didn't do too much, and then Monday's big gap up, we were glad we covered our shorts back in here on Thursday, and then we posted that we were just going to pretty much watch the market and see what price did, see what kind of clues we could decipher from the price and volume action, and to kind of give us a clue about what the market was doing. Well, on Tuesday and Wednesday, we got we saw a few clues in not only the market, but some of the individual stocks and some of the sectors as well. On this move on Tuesday and Wednesday, you could kind of see that price wasn't too convincing moving to the upside. Here's a spider chart again. On Tuesday, you actually see price actually fell back to the middle part of the bar. And then Wednesday didn't trade much above Tuesday's high. Volume on these 2 days was diminishing as price moved up. We know that kind of price pattern is indicative of a non-dominant move. So we're looking for price to continue in a downward direction, but we need price action to confirm that. And now if we start looking around at some of the individual stocks or some of the individual sectors, we noticed one sector that was standing out was the semiconductor sector. Now after this sell-off, you see a run back up to the 50-day. Same kind of price pattern, and it actually broke to new highs. But if you look at some of the individual stocks, you can see that they weren't doing as well as the semiconductor ETF itself. We look here at the inverse semiconductor ETF, SSG, and you can kind of see the same thing. You kind of see here that it traded below the 50-day, and now there's not too much conviction in price to move lower here. Volume is dropping, so we looked at some of the individual stocks in this sector, and we got some nice setups on the short side going into Thursday morning. Here's one chart that we're looking at, Xilinx semiconductor here. You can see on Monday price gapped up, didn't really trade too well. Again, price trades lower here on Wednesday. Thursday's up move was on low volume, and then Thursday's down move, you can see volume come back in to the stock here, and on Friday you get a nice continuation move to the downside. Maxim is the same thing. This is actually a little bit better chart. You see the gap up, price rallies up, lower volume here, stalls at the 50-day, and now on Thursday and Friday you get your